Assalamu alaikum. I am Zona teacher from Iskandar School. I'll be teaching business studies class about the topic the role of accounting. The learning intentions for the lesson is familiarize with basic accounting principles and terms, understand the need for bookkeeping and uses of accounting information. Success criteria for the lesson is students should be able to define bookkeeping and accounting. Students should be able to list at least 3 internal users and 3 external users of accounting information. What is happening in these pictures? What can you see from these pictures given here? You can see some people manufacturing, buying goods, keeping records. These are actually related to accounting terms or accounts. This is what businesses do. They produce goods and services, they provide it to the customers, and there are people inside the business who work in order to keep this process ongoing. So this is related to accounting and also related to what we are going to learn in today's class. The role of accounting. There are mainly two components that you should know in role of accounting, that is bookkeeping and accounting. Bookkeeping is actually the process of detailed recording of all the financial transactions of a business. If we look into our daily business transactions, we go and buy goods from the shops, right? That is what we actually see. But if we look it from the business side, they will be buying the goods and services that they provide to the customers from other suppliers, and they will bring it to their shops or their firm, and they are going to record whatever they bought, and whatever they are going to sell also they will record. And there are employees who engage in this, to whom the business will be providing wages also. All these things that happen in a business is actually recorded as transactions. These are known as transactions. So there will be a bookkeeper who will be recording all these transactions that occur on a daily basis in a business. Maintaining full accounting data helps business to process in the future. So if the accounting transactions are being recorded only, they will have a full set of records of what is happening in a daily basis in a business. So that is very important that the transactions are being recorded. Detailed transactions of how much money it costs, or for whom a good was sold, or from which supplier we bought a good. All the transactions will be recorded. In each business, to record these detailed transactions, there will be a bookkeeper. Next term is accounting. Accounting further processes the bookkeeping information by classifying, summarizing data, reporting, analyzing, and interpretation of financial information. Now when the bookkeeper makes record all those transactions, those transactions are actually classified, summarized, analyzed, and reported in order to make the interpretation of financial statement. Financial statement is where the business will be able to see their costs, their expenses, their earnings, and they will be able to identify whether they have achieved a profit or loss in a given period of time. So that phase or that process is known as accounting. Accounting can take place only after bookkeeping records has been maintained well. This process assists in business decision making process. To make any decision, for example, if the business is getting a profit, it's very good, they can go further and continue their business. But after they prepare the financial statement, if they see a loss, so it is not a good idea to carry on the business, or that means they need to make some changes so that they can earn a profit. So these decisions are made only after the bookkeeping records are classified and analyzed to make the interpretation of financial information. That is very important, and there are lots of people who actually need this to decision making. That is what we are going to learn next. Uses of accounting information. The role of accounting information is to provide useful financial information to assist stakeholders in making financial decisions. So why are we collecting this information? This information is actually collected to prepare some accounting statements, some financial statements, to make it usable to some person. What do you think? Do you need these financial statements or financial information? Yes, there are a lot of people, lot of stakeholders that are related to businesses who needs this information. Financial users make the past accounting information to plan for the future and make decisions. So this information here that we collect, that the bookkeeper records and which is used to make the financial statement, will be further used to make decisions on different things like are we going to buy the let's say for example the business will make the decision, should we still continue buying from this particular supplier, because if we buy from another supplier we might get it at a lower cost. So those things will be analyzed after the financial information has been collected, and it is very useful. If you think of some users, it can be owner. That is the first person who will be bearing all the risk of the businesses. So they will need this information. Even the employees or the people who invest in the business, there are lots of people who need this accounting information. There are internal and external users of financial information. Now we are going to go through some of the internal uses of accounting information. Owners and managers. These are the owner will be the person who is responsible for all the risks, or who will also get all the profits if the business is earning a profit. So owners and managers, they need the accounting information. They are known as internal users. All these people whom I'm going to explain here are internal users because they work within the firm, within the business. They are not from outside, who is not related. They are connected to the business. That's why they are referred to as internal users. They are known as day-to-day decision makers, so they need this information to make that decision. Like, should we sell a particular good at a particular price, or are we going to buy the supplies from a certain supplier? Those things will be made, decisions will be made day to day. Plan, control and run the business based on the financial position of the business. So if they are earning a profit, they will continue like that with more promotions and so on. But let's say if they are having a loss, so they have to think of other ways that they are going to earn a profit. So that can also be done only if they prepare the financial statement with the help of accounting information. Next are shareholders. There are certain businesses where people invest money in a business and they are known as shareholders. They will be given a dividend, which is the part of profit that they earn to the amount that they have invested. So they also need, so that they uses the accounting information to see whether the business is profitable and whether they will get their return of profit as dividend. Next is employees. Assess company's profitability and its consequences on their future remuneration and job security. So the employees are very much concerned about the accounting information. If the business is continuously getting a loss, there are possibilities that they will no longer have their jobs. So there's no job security in a business where they are working, if they are earning a loss. But if they are getting a profit, they have chances that there will be increase in their pay, or they might get a bonus. So they are also very much interested in the accounting information here. So these three parties are actually internal users because they are connected to the business. They work within the firm. External users of accounting information. Prospective partner. Now, there's one person in a business who is bearing all the risk, earning all the profits, so that is the owner. Now, there are chances that people might want to merge and have other partners to continue their businesses. So, to get a partner, or they would want to check the stability and profitability of the business. No one would invest in a business, or no one want to join a business if they are earning a loss. So they will actually need to see if they are profitable or not. Next is lenders. Lenders can include bank. They actually provide credit facilities such as loan to these businesses, small businesses or big businesses. So they will require information about businesses' financial ability to repay loans. If they are getting a loss, and if the business bank thinks they are not going to be able to pay back their loan, then they won't provide the loan. So after looking to the financial statement only, they'll be able to say whether they will be able to pay back it or not. Next is competitors. They are the other people who compete with these businesses. They also need the information of their rival firms, the accounting information. That will help them to know the strengths and weaknesses of their competitors in order to compete well. After they know their strengths and weaknesses, they'll be able to come up with better strategies on how to promote things in their businesses. Strategic purposes like credit policies and debt collecting procedures. These things also will help the competing firms to have similar, for example, similar credit policies and collecting procedures if they are benefiting from that particular strategy. Next is prospective buyers. There are people who buy businesses. So for them also, they will want to buy that particular business if the business is earning a profit. Before buying any business, that a person would like to know reliable financial information of the business. If they are earning a profit or loss, that will be the main motive of buying a business. Credit suppliers. As any business will have, most of the businesses will have a supplier. So if there is a credit supplier, those businesses also, before allowing the goods before allowing the goods to be taken, they will check the ability of the business to pay for the goods. So businesses will be owing money to these suppliers, the credit suppliers. Credit suppliers means they are buying in bulk to pay later. So they are also going to check the ability of the business to pay for the goods. Regulatory authorities like tax authorities. In Maldives, we can say MIRA, for example. They also will need the financial information of the businesses to ensure that the accounting information is in accordance with the rules and regulations. They are going to check if it is prepared in accordance with the rules and regulations. Are they paying the taxes that are required to be paid? So those things they will be checking through the financial information. Protects the interest of the shareholders who rely on this information. So if they are checking this information, it actually protects the stakeholders, all the people which I have mentioned here. Those people will be checking this information. So it helps to protect the shareholders' interests.
In this lesson, we learn about users of accounting information. Accounting helps users in making better financial decisions. But you may be wondering, who are the users of accounting and what information do the users need? Users of accounting are both internal and external to the organization. Internal users include owners, managers, and employees of the business. Owners need to know how well their business is performing. Owners assess the profitability and risk of their business from financial statements. Managers require accounting information to prepare budgets that specify how an organization plans to use its limited resources. Managers also need accounting information to monitor the performance of the organization and to make business decisions. Employees are interested in knowing how well a company is performing, as it could have implications for their job security and income. Employees working in the finance department prepare, summarize, and present accounting information for other users. External users of accounting include investors, lenders, suppliers, customers, tax authorities, government, auditors, and public. Investors need to know how well their investment is performing. Investors rely on financial statements to assess the profitability, risk, and worth of their investment. Lenders and suppliers need accounting information of their clients to assess their credit worthiness. Industrial customers need accounting information of suppliers to assess their ability to deliver goods and services on a reliable basis in the future. Tax authorities review accounting information of businesses to determine whether they declared the correct amount of tax in their tax returns. Regulatory agencies of government review accounting information of organizations to monitor compliance with accounting and financial regulations. Auditors inspect the financial statements and accounting records of organizations to determine their accuracy. General public may also be interested in the accounting information of a company. These could include journalists, analysts, academics, activists, and other individuals with an interest in economic developments.
Now it's your turn. I have a few questions that you can try answering. Which statement best describes bookkeeping? There are two options. A. Classifying, summarizing, and reporting and interpretation of financial information. B. Process of recording financial transactions of a business. I'll give few minutes for you to think about the answer. Very good. It is B. The process of recording financial transactions of a business. Next question. Internal users of accounting information are A. Owners, managers, and employees. B. Competitors, prospective partners, and bank. Very good. Owners, managers, and employees. These are some of the users of accounting information. Your task after you watch the presentation is to complete activity 2.1, page 21, which is in your business studies textbook. You're supposed to answer the questions given there in your exercise book. Thank you and wassalamu alaikum warahmatullahi wabarakatuh.